morning and welcome. It's the midweek edition of Business Morning and the first in the new quarter. Thank you for joining us. I'm Chimeze Obi Iwa. We begin with a global oil market update as oil prices slid further today following their biggest ever quarterly and monthly losses as a bigger than expected rise in U.S. inventories and a widening rift within OPEC heightened oversupply fears. Oil prices are near their lowest since 2002 amid the global coronavirus crisis that has brought a worldwide economic slowdown and slashed oil demand. Crude futures ended the quarter down nearly 70% after record losses in March. In early trade today, Brent crude was down by 47 cents at $25.88 a barrel. U.S. West Texas Intermediate crude was up 12 cents at $20.06 a barrel. An uptick, analysts said, was driven by position building at the start of a new quarter. The bearish mood in the market wasn't improved by a rift within the Organization of the Petroleum Exporting Countries. Saudi Arabia and other members of OPEC were unable to come to an agreement on Tuesday to meet in April to discuss sliding prices. Adding to the downward pressure, top U.S. officials have for now put aside a proposal for an alliance with Saudi Arabia to manage the global oil market. And rating agency Moody's says official debt relief would benefit weakest sovereigns, but uncertain role of private sector creditors is credit negative. According to the ratings agency, such a step by official sector creditors would be credit positive for those issuers. However, it is unclear whether official debt relief will be conditioned on the participation of private sector creditors in some or all cases, or whether pressure will be placed on borrowers or on private sector creditors to procure their participation. The International Monetary Fund and the World Bank had called on official creditors to suspend debt payments for all low-income countries that request forbearance in the wake of the global coronavirus shock. The two institutions also affirmed their readiness to assess International Development Association countries' debt relief needs should the G20 ask them to do so. And the Nigerian Electricity Regulatory Commission has suspended the proposed increase in electricity tariffs initially slated for today. NEC had on January 4 in its December 2019 minor review of multi-year tariff order 2015 and minimum remittance order for the year 2020 for the 11 discos said that consumers would start to pay more for electricity from April 1. The regulator said the wide metering gap in the Nigerian electricity supply industry, currently at about 60%, is a major impediment to both an immediate tariff review and revenue protection for discos. According to NEC, customers of the 11 discos are willing to pay appropriate rates for services rendered by the discos, but this willingness is conditioned on guaranteed hours of supply, quality of power, and adequate metering. NEC directed all the discos to submit a detailed plan for the attainment of full recovery of prudent costs and allowed return on capital by June 30, 2021. Well, President Muhammadu Buhari, in his broadcast on the COVID-19 pandemic earlier this week, directed that a 3-month moratorium be given to all federal government-funded loans issued by the Bank of Industry, Bank of Agriculture, and the NonOil Export Bank as a way of cushioning the effect of the pandemic on citizens. How do these institutions plan to comply to these directives? I'm being joined by the Managing Director, Nigeria Export-Import Bank, Mr. Abba Bello. Thank you for joining us, Mr. Bello.
My pleasure.
All right, President Buhari, in his nationwide broadcast on COVID-19, highlighted the moratorium to be given by the development banks as part of the palliatives for businesses. Exim is a key player in this space. Can you give us more insight into this palliative and how you plan to carry out the president's directive?
It is good to put the global situation into context because as financiers of exporters out of Nigeria, the global situation directly affects the exporters from Nigeria. Now, since the advent of the coronavirus in December, we have gradually seen shutting down of major international markets. The global markets, starting from China, down to Europe and the rest of Asia have locked down. And this lockdown has directly affected exporters from Nigeria. Our export destination is largely to Asia and Europe. And these lockdowns have created a supply chain disruption that has affected the working capital of and trade processes of our exporters. Now, that will have an adverse effect on their revenues and liquidity. So the palliatives that the president and indeed the Central Bank of Nigeria has rolled out will serve as a cushion for exporters of Nigerian commodities. Now, the trade disruptions have caused drop in prices across board. In our export basket, cocoa has seen a year-to-date drop of 13%. Cashew nuts has seen a year-to-date drop of 23%, and sesame of 34%. This headwind is affecting all commodities, all metals, and in fact, the Financial Times this morning has reported that all asset classes globally have been disrupted. What are the palliatives? The palliatives are supposed to give some relief to the exporters of Nigerian products by extending the moratorium period that some already have, or giving moratorium periods now to see out this period of global disruption. Now, for us in Exim Bank, we have different classes and different products that our customers enjoy. We have project financing, which will normally require moratorium periods because it involves maybe setting up of equipment, financing expansions, and so on. For those, we have already in compliance with the directive of the federal president, Muhammadu Buhari, and the Central Bank of Nigeria, already extended these facilities and moratorium periods by a period of 1 year. Now, we also have trade facilities, which usually have cycles of 30 days, 90 days, or 120 days, as the case may be. Those we have, in the first instance, given a moratorium period of 90 days and are looking at it, depending on how long this pandemic lasts, to extend it further. But we have gone ahead to also extend these facilities for 1 year. And we believe this is just the beginning of the palliatives and also concessions that we'll give to help our customers see out this tough time.
Now, have you thought about the term period for your bank? What are your plans to mitigate the impact?
Well, for us, what we have to do, what we know is both for our customers and us as a bank, liquidity at this period is the most essential thing for us. They say at hard times, cash is king, and these are the times where we have to ensure that we are very liquid. Now, one of the things that we are trying to do is to expand our facility base. And we have already opened discussions with some of our financiers, Exim to be specific, to access their pandemic trade impact mitigating facility. And we're looking at refinancing some of our facilities to at least a tune of $100 million. And this will also be extended to some of our customers where we're beginning to see payment defaults, contract cancellations, and also defaults from off-takers of Nigerian products. So this will help to mitigate and block the gaps that have started forming.
Some of your lending are in foreign exchange. How do you manage the exchange risk and the implications for the capacity to repay loans consequent on this risk?
Well, the policy in the bank is, since our funding is to finance exporters, the policy is all loans that are taken in foreign exchange must be paid in foreign exchange. They are exporters, so all their revenues come in foreign exchange, and it now mitigates that risk of exchange. However, there are some project financing that will require Naira facilities, and that exposes us and the customer to exchange risk. Where that happens is we try to find products like swaps with the Central Bank of Nigeria, who will hold the dollar and extend Naira facilities. That, to a large extent, mitigates the risk of foreign exchange.
All right, you talked about a free Exim bank. Now, the bank last week announced about $3 billion facility to cushion the effects of COVID-19 across member states. As the largest shareholder of the institution, what is Nigeria likely to gain from the fund?
Well, the facility is open to both government, financial institutions, and customers that are operating within economies of Africa. I mentioned earlier that we have already started discussions about $100 million line of credit with them, which is a part of the pandemic trade mitigating facility. It is open to the government of the Federal Republic of Nigeria. It is also open to other financial institutions within the Nigerian economy to access. We have already applied for, and discussions are ongoing for $100 million of the facility.
Now, in terms of federal government's debt obligation to our Exim Bank and, of course, the president's call for engagement to secure an extension of such debt servicing, where are we on that?
Now, directly after the president's address on the 29th of March, we, on the 30th, have already drafted letters to all our customers, depending on the class of loans that they have, informing them of our compliance with the president's directive as well as the central bank's directive to give moratorium periods for 3 years, 3 months, 1 year, and also reduce interest rates from our current 9% to 5%. Now, that will entail a lot of restructuring of the loans in repayment schedules, and also giving new offer letters to reflect these changes. Our officers are already working at home to ensure that this is done, so that as soon as the lockdown is open, we'll communicate same to our customers. But we have already adjusted our books for interest rates and closed the month, 31st March, with the new rates at 5% for each of the classes of loans we have. And this is effective from March 1st for all our customers across board.
All right, the non-oil export accounts for only about 10% of our export earnings. From the perspective of Exim, what are the major impediments to the growth of our non-oil export? Is it funding or infrastructure or policy-wise?
Well, 2019 statistics showed that non-oil export for the first time has gone into double digits as its contribution to foreign exchange earnings for Nigeria. And this is the first time in many years that has happened. It only shows that the effort of the federal government of Nigeria to diversify the economy is working. But generally, there are challenges to export. When we talk to exporters on our enlightenment programs for export, the first thing we hear about the low participation of Nigerian businesses in international trade is funding. So it is the biggest single challenge that most exporters have. But it goes beyond that. We have challenges that are infrastructural, both hard and soft. We have challenges that are related to certification and standardization. We have challenges that are other non-tariff barriers. However, the reason why there is not much funding targeted towards export is because the whole value chain has not been de-risked. And Exim Bank, as a development finance institution that is charged with funding and promoting export in Nigeria, has that role of de-risking the export sector. But it becomes even more worrying that when you hear that only 1% of loanable funds in Nigeria is targeted at exports, you begin to understand the scale of the reason why non-oil exports has not made a serious impact in the diversification efforts of government.
Now, by virtue of your mandate, you also support imports. What kind of imports do you support? And do you have a special lending window for indigenous companies, especially the SMEs?
Well, the import in our mandate is not for import for domestic use or domestic consumption. Import we do is to support manufacturing for export. So we import equipment and inputs that value will be added locally and will facilitate export. And I will take an example of, say, the leather industry, where chemicals, first of all, the equipment for tanning will have to be imported, largely from Italy or from China. And then after the import of the equipment, they also need certain types of chemicals that are not available in Nigeria. We finance such imports. However, we do not finance import for consumption in Nigeria. So now, the second part of your question, you asked if we support SMEs. Yes, indeed, we support SMEs. Most of our beneficiaries are SMEs, although on the upper part of small and medium enterprises. We have started several programs that will try to bring in new exporters, small-scale exporters, into the global market. And what we are trying to do is at least try to get them to sell or export within the region of West Africa and Africa. And that opportunity is presenting itself with the opening of the Continental Free Trade Area. So we support SMEs.
In less than 1 minute, Mr. Bello, post-COVID-19, what are the plans for a return to normalcy in trade financing for the private sector?
Well, Chimeze, it's going to be a tough year. And as the pandemic grows and persists, it's even going to be tougher to recover. But for most businesses, what should happen now is for all business leaders to reflect, rethink strategy, remodel operations, and prepare for the recovery process. It's going to be long, it's going to be painful, but I believe with the resilience of Nigerians and Nigerian businesses, we're going to come out of it pretty soon. And Exim Bank will be there to support its customers financially and with our advisory services for whatever challenges they face. We'll try to partner with them to ensure that they come out of it pretty soon.
Thank you very much for your time, Mr. Bello. Abba Bello is the Managing Director, Nigeria Export-Import Bank.